Thank you very much for attending. It's nice to see such a big crowd for the big names we have here on stage. My name's Chris Bishop. I'm the founding editor of Forbes magazine on the African continent. I've been a journalist for 36 years, and I've spent 23 of those years reporting on business economics in the African continent. I'm very proud to be up here on the stage here today in Washington, D.C. with a lot of good names here. And one of the things that I can say about my time in reporting on the continent, the three issues that I think are the greatest issues that are going to either make or break the continent of Africa: the foreign investment, energy, and infrastructure. And we hope to touch all of those important issues during this very important debate. But just to start off with, I would like to invite upon the stage here Mr. Mohammed Fall, the Chief Underwriter of MIGA, who's going to give us an opening message. Please hand it up for him.
Good afternoon, everybody. My name is Mohammed Fall, as mentioned, and I'm the Chief Underwriter and Associate Director of Operations here at MIGA. We're thrilled to have everyone here today, which is the kickoff of our 30th anniversary here at MIGA. In 1990, 2 years after we were created, our gross portfolio was just 132 million USD. Now, fast forward 30 years later, and you see an agency that seems to have come into its own with a record-breaking fiscal year of 2017 of just shy of 5 billion USD. And a gross portfolio that has grown to over $18 billion in this period. While we are clearly proud of our growing business, I personally am even more proud that as of the end of the fiscal year 2017, 61% of MIGA's projects fall into at least one of our priority areas of IDA countries, fragile and conflict-affected states, climate change, and innovation. That said, today isn't only a 30-year anniversary event. It is also about the subject of innovation, a topic that is near and dear to our hearts here at MIGA, as it's been central to sustaining the strong growth trajectory we've been on the past 5 years. More specifically, today, we'll be talking about the subject of innovating to mobilize private capital. At MIGA, we believe that cross-border private capital is essential for helping extreme poverty and boosting shared prosperity. To attract such capital, governments and development finance institutions must apply innovative tools that lead to an investor-friendly environment. This event will showcase how, driven by national priorities, MIGA works with governments, the private sector, and other World Bank Group agencies to drive capital in innovative ways to high-impact sectors. You will also hear of exciting innovations from a distinguished group of people who work day in and day out to drive private capital to developing countries. We are excited to have with us here Minister Ken Ofori-Atta, Minister of Finance and Economic Planning, Ghana, Mr. Bill Winters, Chief Executive Officer of Standard Chartered Bank, Kristalina Georgieva, our Managing Director and Chief Executive Officer of IBRD IDA, who will arrive shortly, Mr. Philippe Leroux, Executive Vice President and Chief Executive Officer of IFC, and last but not least, our host and my boss, Keiko Honda, Executive Vice President and Chief Executive Officer of MIGA. Finally, to get us all on the same page, we now have a short video showcasing how Jordan drew private capital to its ambitious solar energy program. It's a wonderful demonstration of innovation mobilizing private capital. Thank you, everyone, for your kind attention, and welcome again. May we now have the video, please.
To reduce dependency on oil and gas imports, Jordan is aiming to ramp up the contribution of renewable energy to 10% of generation capacity by 2020. A third of this new capacity will be from solar power.
This will help diversify Jordan's energy mix, increasing energy security, and reducing the reliance on fuel imports.
The country is using public-private partnerships to help pay and has managed to attract more than $3 billion for renewable energy projects in the past 3 years. A national renewable energy program has helped transition Jordan off public sector financing.
The government had a very good program with a bankable power purchase agreement and a very good framework for investors to feel comfortable to come in and develop solar. And it was sort of a win-win for the government and for us as investors. So we decided to go ahead and do 4 projects.
All 4 projects entailed construction and operation of solar plants that will sell electricity for 20 years to the national utility. The Ministry of Finance offered guarantees to each of the project companies to ensure the utilities' obligations are upheld.
So MEGA is providing 4-point coverage to Adenium for the solar projects in Jordan against the risk of breach of contract, expropriation, transfer restriction and convertibility, and war and civil disturbance. MEGA
played a very important role for us as we were developing this project. Getting an extra layer of insurance or protection is always welcomed, and we worked with MEGA to get that. For us as foreign investors, made us feel a lot more comfortable that in case something happened, not only did we have the government guarantee from the Ministry of Finance, but also MEGA could step in and help us claim some of our equity that we had invested.
MEGA is providing a guarantee on the government of Jordan's guarantee, which I think provides a lot of comfort to the investors that their investment is going to be safe for the 20-year PPA that is underpinning this project. I think there's a really crucial demonstration effect. The success of round 1 very much led to subsequent rounds going forward, attracting more investors who wanted to come in, who were interested in those projects, and at the same time bringing the tariff down, so that on an aggregate basis, the cost of electricity in Jordan is constantly on a downward curve.
A 3rd round was announced towards the end of 2016 and is currently in the offing. There's much from this example that can be applied to other countries and other sectors.
Well, there's the inside story on this very interesting solar power project in Jordan. Philippe, if I could start with you. I understand that there was a very competitive bidding system that was set up behind this project here. How difficult or otherwise was it to bring the whole project about?
Well, let me step back because I think that it's very important to get the sequencing right. And as you've seen in the video, this is correct. The first move is the government. The government decided we go on solar. We are 93% dependent on imported energy. So that was a deliberate strategic decision. Then they basically changed a number of laws. The last one is a series of laws, the last one in 2012, which was the renewable energy law. That opened the floor. Very, very important. I cannot stress it enough. Then what we did is try to pool to get the best price possible, to pool what we call the 7 sisters, different plants together that we auction, and then we structure the finance and the guarantee. So this is a very good example where 3 institutions of the World Bank work together, each in its particular role. So we structured the finance. For us, it's working with the government on the bidding documents, making sure scalability is a key word once you go from the legal changes, regulations, to actually implement. Because if you do for small bits and pieces, the price will be much higher. I mean, it's that simple. So that's one of the key ingredients. And if I can put a plug there, this is something that we want to see more of, because for a long time, we were relying on investors coming and saying, IFC, here is an investment project. Can you structure the finance? With a new program that we have that is scaling solar, we are much more proactive. We go, work with government, find the location, very important, how far from the grid, what is the orientation to the sun, is a lot of technical stuff. And then you bid, you auction, which is very proactive. You go after the investors, you don't wait for the investors. I know it's a little point, but it makes a huge difference, because all of a sudden you go from reactive to proactive. And that, the scaling solar, for me, is one of the model of the things that we want to do more of in IFC going forward.
Minister, if I could turn to you now. What is the ability, do you think, of emerging African nations like Ghana to pull in the kind of investment to create projects like this?
Well, thank you very much, and thanks for the invitation. I think really for Ghana, there's been quite a sea change in the past 9 months. And I guess in our sense is a new generation of sort of political leadership infusing government with private sector participants. And as you can see from what has happened in the past 9 months, we inherited a pretty difficult situation, 9.3% deficit, inflation of 15%, and running a primary balance which was negative, meaning we're borrowing to support our loans. In addition, at a 73% debt to GDP ratio, there was very little fiscal space. But I think that becomes the real constraint to attracting private capital. And that also leads to transactions because your risk levels are so high. So in the past 9 months, we've just tried to de-risk, in a sense, the country, in which we've been able to now grow 6.6% the first quarter and a 9% the second quarter. We are running a primary balance which is positive. Inflation has come down to 12.3%, and the central bank has also been able to ensure that our coverage for imports is increased to about four months. So that then sets the stage to de-risk ourselves. And as you realize, these past few months, both Moody's and S&P and Fitch have upgraded that. It then begins to set the platform. But we have to be really cognizant of the issue of debt sustainability because everybody is throwing debt at you. And we therefore need to say, look, the country is being de-risked. Look at the cash flows that will come from the projects that you want to do. And we are there to ensure the rule of law, avoid expropriation, but assure you that our commitment to fiscal consolidation, macro stability, should be the key elements for growth.
If I could bring it to you, Mr. Winters, now, in the banking and investment world, what do you think foreign investors worry about when they look at projects in such countries as we've seen, Jordan, maybe even Ghana?
I think, as the minister just said, of course, the first thing that we focus on is the sustainability of the country's finances itself. Whether it's rating agencies or the way banks assess credit, we always look first to the sovereign and then at the companies that are operating within the country. So when we have a government that takes the sorts of steps that Jordan has in their own ways, but certainly Ghana has in the last year, it's a big confidence booster. But of course, that's the starting point. It goes beyond that. There's always questions about rule of law, the predictability of both the politics and the resolution processes in the judiciary system. It's critical that that infrastructure is built and developed, and also that confidence is built. I think we look very specifically at the ability to enforce the contracts that we enter into. And we look at the risk parameters that relate to the specific project, but also to the country. When we get to the role that MIGA or other international agencies can play in that regard, it's helping us to understand both the underlying capabilities and predictability of the infrastructure that's in place, but also how we can risk share in a way that can allow each of us to take the pieces of the risk that are most suitable for our own balance sheet or the balance sheets of others that we can bring in, whether those are international investors, other banks, or other international agencies.
Keiko, if I come to you now, I mean, this idea of taking the risk out of investment for foreign investors, it's not a unique thing. The African Development Bank does something pretty much the same. But how is MIGA, you think, trying to tackle the problem head on of taking that risk out?
Okay. For this project, we gave private investors the confidence that the Jordanian government would honor its commitment. We did this by ensuring the 4 typical political risks. Let me raise it. Those are the 4. Number 1 is the currency incompatibility and transfer restriction. Number 2, expropriation. Number 3, warrants to build their servants. And the last one is a breach of the contract by government. In Jordan's case, not meeting its obligation under power purchase agreement. Keep in mind, the project that we are discussing here has a long tenor. This project is over 20 years. In that many years, administration may even change. Also, the private investor side got benefited to have this, this going. At the same time, government is benefited, make this project move without investing themselves. As Mr. Minister, you pointed out, many countries, including Jordan's, are carefully managing their balance sheet.
Philippe, I'll come back to you. You've worked on a lot of these projects. A lot of the foreign investors I speak to on the benefit of Forbes magazine, they still quote 2 words to me about projects in Africa: political and risk. They say it's too much for them, and they've got other places to go, and I'm sorry, they're not going to hang around if they think there's too much risk. How do you deal with that?
Well, one country at a time. I think that's, I mean, there's not one simple magic bullet. You have to think maybe in terms of layers. I think what the Minister of Finance said is the base. Because if you don't have that, I mean, everything else doesn't happen. So you're absolutely correct. That's the foundation on what you have to base: good macro policies, good regulations. But that's maybe not enough. As Keiko said, you can have a good administration for a few years, and then, but when you get into contract on 20 years, you want to be also reassured that there is some continuity. So this is where I believe the World Bank as a group, if you think about it, is really a de-risking machine at every level. We work with the government to improve the enabling environment on some sector or across the economy for enterprise. We work at the sector level, again, with government and in investment, both in terms of policy work and investment on the public side, which also can be very important, and enable private investment. We work to de-risk projects through IFC, which is a way to de-risk the project. We crowd in a lot of other financiers because they're reassured that we're there, because we have an experience in structuring very complex deals, and MIGA. So the whole thing, if you think about the group, is really a unique de-risking machine, from analytical work to the government all the way to structuring every single project. But, you know, there's a trade-off. But I come back to what the ministers say. I think for me, the macro and the predictability, at least you have to, is really the base, in my view. Otherwise, you can compensate, but the price, there's a price for risk. And then the price may become too high to be worth it.
If I could come back to you, Minister. By the way, there will be time for a few questions at the end of this debate, so I hope you're all taking notes. If I come back to you, Minister, again, another thing that foreign investors say to me is that some of the risks they think can be controlled. They say if each government in Africa can get its regulations set in stone, the playing field level, they would be happy, no matter whatever the political climate. What do you think countries in Africa need to do when it comes to regulations, in terms of creating that certainty? Bearing in mind governments come and go and change sometimes.
I think maybe a key issue and the way we are addressing it is to create a term now that has become quite popular, what we say irreversibility. So we go to Parliament and say that, okay, budget deficit is not going to go beyond a certain band, and that is law. You have a Public Finance Management Act that becomes law. So in that sense, it becomes pretty transparent, the platform in which you are dealing with. But, you know, I mean, you followed investments these past 20 years, and people have invested in Russia, the Soviet Union, you know, places that you know you wouldn't take your money. So sometimes you wonder whether it's just really an excuse. And therefore, maybe genuinely for Africa, it's an issue of using your magazine, creating, trying to clear away the information asymmetry to get people comfortable and people coming to the continent enough for them to realize that, I mean, these risks are not risks that are any more than what they did in Latin America or in Russia at very difficult moments. And you have companies like Standard Chartered Bank and Unilever who have been there for hundreds of years, who can attest to an ability to shield your investment horizon. But truly, going forward, looking where Africa is with regards to resources and population, I think it's a big mistake for any fund not to begin to have a certain amount of weighting on the continent.
So, Bill, there's a question there. The Minister mentioned our magazine. We do a lot of stories about what's actually happening on the ground. We try to go beyond the headlines, beyond the knee-jerk stories. Do you think there's a case that sometimes foreign investors don't look closely enough at actually what is happening on the ground across Africa, and perhaps they miss out on opportunities?
No, I think that's a certainty. And as you'd expect, I agree with the key points that the Minister has made. We have been in Africa for 150 years. It's not that we understand the risk in Africa better than anybody else. It's that we know that the risks are there, and we have an idea how to manage them. Because the risks are there, and they're real. And over long periods of time, you can create exactly the kind of predictability that the Minister has set out, and in fact, I'm sure is intending to deliver. But we know that things also change. Against that backdrop, it requires a real investment for somebody who's not familiar with a particular market. Obviously, the continent itself has many, many different markets. But for somebody who's not familiar with those markets, it takes a real investment, not just to understand the legal framework, the predictability of the macro and micro policies, but also to convince the organization back home that this is a useful incremental destination for the allocation of resources against other things that might be much easier to understand. When we look at Africa, we see tremendous opportunities and potential. We see fantastic demographics, which are somewhat unique in the world right now. We see a resource base that's phenomenal. And we see a willingness to reform that, while erratic and volatile from time to time, is consistently moving forward. And when you take the long view, especially in our case, it's quite helpful to have a good starting point. But when you're prepared to take the long view, you can see through the inevitable volatility in some of the markets in which we operate. A big part of our mission at Standard Chartered is to help international investors and other banks who are less exposed to that market to have some of the same sense of potential, but also risk management that we've developed the hard way over decades or centuries, actually.
Keiko, you mean your organization, you guys, you've been at this for 30 years now. It's a long time. From your experience, what do you think the big opportunities are for governments and foreign investors, maybe that the world is missing out on? I mean, where do you think the big opportunities are?
Chris, thank you very much for the very interesting questions. Before I answer the questions, because this is our 30th anniversary kicking off events, if I may, I'd just like to showcase how we are working with the private investor like a Standard Chartered Bank to going into a country like Ghana. last 30 years, we have covered over 800 projects in 110 countries. I'm very proud of how MIGA has been creating development impact and has been growing our annual guarantee issuance. MIGA's guarantee annual issuance has grown by 75% in last 4 years to the record level of $4.8 billion. Our guarantee outstanding as of today is $18.3 billion. More importantly, we have an impact on the ground. Let me showcase last year's. We helped 8.5 million people have gained access to power, facilitated 8.7 million patient consultation, and helped to avoid 1.1 million ton greenhouse gases. I am very proud of my team. There is much more needs in the world. 1.3 billion people do not have access to the power. 780 million people do not have access to clean water. So the government MDBs cannot meet these needs alone. We need a private investor. Bill. Then to answer to your question, Chris.
I think so. If I could just move on to you, Philippe, now. I mean, we've talked a lot about energy. We've talked a lot about infrastructure so far. These are the big projects that people can see. They can watch films on it like we just have today. How difficult is it sometimes to get private investment to other areas equally as important, but not as high profile as the ones we've seen?
Well, we are, a good example is Turkey health. And if you kind of take out the fundamental changes, same idea. You have a government that wants to have a big impact on health, budget constraints. So how do you solve this equation? Private sector investment, but not any private sector. According to a government plan, we worked on the change with the bank, and the bank put a development loan to facilitate these reforms on the PPP in the health sector. That unlocked a lot of opportunity. I think that I don't have the exact number, but I think about 30, 40 hospitals were created with minimum input from the government. Now, you have contingent liabilities, but it's still less than having directly public financed hospitals that are working, and it has been a huge impact. So we can adapt this model to sectors, including so-called social sectors. So I am pretty optimistic we can do it. But again, the key driver is in many ways, and we see it in Latin America, where you have, in some countries are hitting a public debt ceiling, or self-imposed or imposed by others, by rating agencies. Then the key is, okay, how do we manage the deficit? How do we manage the macro? And yet deliver for the population the basic services. And that's infrastructure, but it can be health, can be education, can be many other things. So we have now, in the last few years, tested a number of models. And I think it can be replicated. And we know now what works, what doesn't work. You learn every day, I agree, but it's not new. What I'd like now is to lean forward, to engage with government, to say, okay, there are private sector solutions. I know it sounds pedestrian, but sometimes it's worth it. And say, okay, what sector? And then we have to balance public and private interests. Because if you lean too much on the public side, private sector is not common. If you lean too much on the private side, then the private sector may come, but then the government may have huge potential contingent liability and issues. So it's a fine art but I think that in many countries we're getting to it. And I think this is a huge potential in the years to come.
Minister, if I come back to you, arguably in Africa, Ghana is one of the countries that's aggressively going out there to get hold of foreign investors. I understand some of these efforts are bearing fruit now for Ghana. Can you give us some idea of what we'd like to see in the next couple of years in your time in the ministry?
Thank you very much. I mean, obviously, with the need for about close to $2 billion worth of infrastructure every year required, etc., there's a lot of outside capital that's required to do that. But I think the base of our own financial infrastructure has to be stronger. And this is where the central bank has been very bold about cleaning up the system. Because once you have the macro stabilized with indices trending in the correct way, and then you begin to find liquidity for the market. Fortunately for us, we started a pension fund about a decade ago, and that has not been used. So we have the opportunity now to use that as a catalyzing effect. We also created what we call the Ghana Infrastructure Fund. So that then becomes a seed to attract further capital to support that. And in that, you have private sector and public sector working together in a way in which we can support investments that are coming into the country. So we're feeling like at this juncture, the groundwork is being laid strongly. Not only are we tackling the macro issues, but also actually making capital available. And it's important because that type of liquidity then supports SME financing, which really, in the end, is what gets to the issue of joblessness, which needs to be tackled and which needs to be supported.
Bill, could you give us an idea on how this is working from an investor's point of view? Could you give us an example maybe where perhaps you struggled with investment in a particular country in Africa, and maybe an example of where you sailed through and all the right things happened at the right time? I'm sure you got lots of examples down the years.
Well, no struggles, only opportunities. So, but not every opportunity is exercisable. But I think it is correct that every deal is challenging in Africa. I would say every deal is challenging everywhere, but in particular in Africa, because some of the reforms that the minister and others have talked about are relatively recent, and as I mentioned before, somewhat volatile. But I reflect back on a transaction that we did together with MIGA in South Africa with the land bank. So, I mean, if we go back, what was the problem or the opportunity? The opportunity was that the underlying financing of the agricultural sector in South Africa required term financing to match the nature of the underlying assets, ideally in local currency, in rand. The available financing was overwhelmingly short-term and in dollars. And that kind of a mismatch is very dangerous for the organization that's engaged as the lender and intermediary. So we were able to pull together a transaction with tremendous support from MIGA with a substantial risk sharing that extended not just to the financing, which was a 10-year facility, but also to the associated hedging, with the residual risk being taken by Standard Chartered and other banks that we brought in to that transaction. To me, that's a classic example of the really effective blended finance. To use all the buzzwords, it's enabled the crowding in of the MIGA, enabled the crowding in of private sector funding into a public sector entity for a public good. Now, nothing about that transaction was straightforward, and the way that the risk was ultimately parceled out required a lot of iterations, but ultimately quite successful, and I think in the medium term, transformative.
Keiko, if I come to you, I mean, how much homework do you think foreign investors are doing in Africa before they actually go into projects? Do you think there's enough due diligence going on?
Of course, many experienced investor like a Standard Chartered Bank has a very good idea what's going on. Having said that, vast majority of investors who are actually now thinking about how they should enjoy the higher economic growth in Africa, what they really have is some kind of concern, but they cannot really articulate the concern. World Bank Group, World Bank, IFC, MIGA together, what we really recommend to them is to slice the risk and find a way to mitigate each risk. Since some of the risks are perceived risk, and some of the risks are real risk. I am not saying risk-free. I think there is a risk, there is a challenge, but there are some perceived risk, they should forget about it. There are some commercial risk, I have to ask private investor to take it. Some of the non-commercial risk, this is the area IFC, World Bank, MIGA together have several different products to support, mitigate.
Philippe, I mean, how difficult do you see the whole mix of getting foreign investment to come into the continent and avoid that kind of risk? How difficult can it be sometimes to achieve?
Well, there's two things, and I like to bounce back because when we talk about capital implicitly, we save foreign capital. But let's talk also about local capital. And what the ministers say is, for me, extremely important. We have to start developing local capital markets. Yes, it takes time, but you can see it takes time two ways. The way I see it is one more reason to start early. Or you can say, oh, it takes forever, so no, it's not. I think it's very important because we talked about this infrastructure, we talked about health, if you have an income stream in local currency, but you finance in foreign exchange, you have a shock of whatever form, you have a 30, 40% devaluation, the best project is not best anymore. So you need to have the solution, just even for the swapping of the risk. You need a capital market for that. So that's kind of the internal. And external, I mean, that's another way to ask, to answer what Keiko was saying. I mean, I think that there is a lot of perceived risk and real risk. It's our job to try to sort it out. And there's not one rule. It's really one country at a time. It's in point in time and space and sector, to be honest. So I think that it's much more granular. And we have, indeed, the instruments to carve out the different risks and address them.
Mrs. Kristalina Georgieva, the CEO of the IBRD. Thank you very much for joining us. If you could catch up with the next question to pick up with the debate. We're just talking about how difficult it is to blend in private money and reducing the risk in foreign investment in Africa. What's your organization's view on this one?
First, my profound apologies for coming late. I was chairing a meeting on ID for development. So we want to be sure that everybody on this planet counts. Congratulations to MIGA for the 30th anniversary. We, at the World Bank, that part of the World Bank group, are primarily focused on identifying barriers to investments. Why are they not happening? Why a good project is not attractive to private investors? And then what we do are three things. One, we identify policy change that can eradicate this barrier. Two, we look at additionality that may be necessary as concessional finance to bring down the risk to investors or attract first movers. And three, we can be part of a package of investing, more and more diversifying our own instruments. So we can provide guarantees, we can take some component of a project and then finance it, or we can say if the private investor doesn't do a good job and yet the project is already started, we will be there for you to finish it. And so that is all. I'm sure you would say that sounds very commonsensical, so how come you guys haven't done more of it? And we come to the most significant obstacle, and it is actually, we looked around to see what the problem is. Guess what? It's us. We have developed institutional silos for a variety of very good reasons, but time has come to say enough. And you see here the three of us representing 4 parts of the World Bank group, actually working hand in hand to make the investments on scale possible.
If I could come back to you with a question there. I mean, we've been talking about it before you came. I mean, what do you think are the biggest stumbling blocks to major private investment in the African continent?
Specifically in Africa, there are 2 very big issues. One is the continent is not homogeneous in terms of overall conditions. You have parts of Africa that unfortunately are being torn by conflicts. You have the spillover impact of these conflicts, and overall a high perception of risk that is associated with the region, even if the particular country or region are not risky. We keep saying, look, based on repayment and service of debt, there are so many places in Africa that are as good as OECD countries. The second reason is we have to admit that still in many countries, we do have a use of money in the not most appropriate manner. Euphemism enough? It's a problem, and it is not a problem, by the way, just in Africa. It is a governance issue. To me, these are the 2 things that are more often than not on the way of investing in Africa. What to add to this injury, we also have had in the last decade the whole world in not great shape economically, and that impacts everybody. And we had a commodity crisis that has pushed some well-performing African economies backward. Now, for this, to me, our duty is to be as detailed and qualifying on conditions for investment. We can only do it if we ourselves are present. And I want to compliment IFC, my colleague Philippe. When we are there, this is a signal. When we are there and we do business, that of course is very telling. We know a lot, we can share, we can at least address the perception problem.
So, Minister, if I could direct this question to you. You mentioned the misuse of money there. I mean, all too often in the past, that is often laid at the door of government across Africa, misusing money. But even as we're finding out to our cost in South Africa right now, it's private businesses as well are being accused of having poor corporate governance within them and falling by the wayside. I don't know. Sometimes I think as an editor, it's desperate times that are bringing these things on. I don't know. What's your theory on that one?
I suppose this is. I suppose you're talking about corruption and you don't want to use the word.
Well, corporate governance is a nice phrase for it, I suppose.
No, I mean, it is interesting with regards to corruption. And in 9 months, I've seen different phases of corruption. Certainly, you would say that there's that is sort of the political elite are participating in. But when the World Bank does a study since we came on energy and realized that we have signed PPAs where whether we turn the light on or off, we are paying $600 million. That is corruption being imported from outside. You know, let's just be very clear about that. And it is really sad because the same donor partners never point fingers at those corporates who clearly have engineered that. And I think we need to bring some transparency in that. Then secondly, there's also sort of a failed state or a sense that a social contract between the political class and the body politic has not been honored, which then leads to a certain deterioration in citizenhood's respect for the public purse, so that the leakages are pervasive from your very good person sitting in the front pew of the church to whoever is, you know, in the street. And so we need to begin as governments to show faith to eliminate that. But beyond corruption, really to attract investments is what Philippe talked about. How do we, on a certain level, put resources into our capital markets? Because that allows for a certain price discovery that is important for a modern society. And to scale that, to regionalize that, so that you then begin to get capital into that. But in looking at fund managers, for example, I mean, I think it is about time that boards and shareholders begin to insist that a certain proportion of capital should go into Africa. Because really, if there's a future, how can you not be testing, investing, and having a part of your portfolio that has to be, you know, in that region? And I think there are enough countries coming up that can absorb that type of capital. And when you look at the compact countries for the G20, you begin to see a certain alliance and club which is going to have a peer effect, the neighborhood effect, which then will demonstrate that Africa is ready to absorb this new capital.
Minister, thank you very much. I think we've got just a few minutes left, time for 3 questions for our heavyweight panel here before we close. Can I see any hands? Yes, gentlemen in the 5th row there.
I have a question. A lot of what I heard today is reminding me of a IIF roundtable back in April about the inability to transport the information from interesting projects to private sector. G20 has an initiative on promoting Africa and investments in Africa. Why is it necessary to have the G20? And are you concerned about the White House being very critical about the work of G20 in such areas? Are you concerned about that you don't get the support, especially from the US, about the work you do? Thank you.
Okay. Who's going to take that one?
That sounds more like a question of a panel of G20. But let me say this. We were very engaged with Germany on the initiative they have taken to build partnership with Africa, not assistance to Africa, but through a meaningful engagement and partnership. So we felt that we are actually getting to a concept that if we have staying power, in other words, we engage over a long period of time, would be very beneficial exactly because it is based on the countries themselves being interested, investment opportunities identified in an open and transparent manner, and that combination of identifying barriers, removing these barriers, and making sure the investments are happening, being in place. And I would say, so far, so good. The compact countries seem to be seeing themselves in the driver's seat on that, and the partnerships that are forming seem to be producing some good results. But hey, if anybody thinks that in 6 months we're going to fix problems that have been building up for decades, this is really naive. My worry is more around, are we going to stay engaged for long enough for these projects to materialize and to see meaningful difference?
Okay, one more. Gentleman, he had his hand up at the beginning. Please, sir.
So I'm Bill Cunningham, Creative Investment Research. Want to find, congratulations on 30 years. Want to find out what you're doing with respect to fairness and equity with respect to some of the investments. Let me say this lastly. You guys have danced around the issue of simple racial discrimination against the African continent with respect to attitudes, misadjusted risk attitudes concerning the continent. So I'd like you to address those two. Thank you.
It seems like I came last, so I would be, any question that nobody else wants to quite answer would come to me. Look, it really puzzles me that you're framing a question in this way. I was with the World Bank for 17 years, then I worked in the European Union, I came back to the bank, and I have never felt that there is any sense of discrimination. We actually, if anything, we are striving to do more with Africa, I stress that, not for Africa, with Africa. We got a record high IDA replenishment this time around, $75 billion. Overwhelmingly, it is for us to work in the most creative possible way to unleash potential of people to help themselves in Africa. And so at least I would stand for my colleagues. We are a very diverse group. We have many colleagues from the region. We have very senior colleagues, vice presidents from the region. I love them dearly. I see, frankly, from my heart, I see no ground in your question.
Okay, just quickly.
Can I just echo on this?
That's for you to ask.
Can I just echo on this? I also have not really seen it. MIGA's case, more than 25% of gross guarantee extension is in sub-Saharan Africa. And investors from Europe, US, Asia, many different parts of the world, I have not really seen any discrimination from them. They are very keen to work with. However, Africa, for many of the investors, led at the Renew region. That's why they try to figure it out, how to work. We focus too much on the risk. That's why you might have a little bit of a different biased idea. Having said that, we are working there, investors are out there. But how to make things more quickly progressing, that's, I think, we are talking about today.
Okay, well, I'm afraid we've run out of time here, but the minister wants to have one final say. You take the floor.
Yeah, I think this is it is a difficult question, and there is discrimination everywhere, one way or the other. But for example, the compact. There are 7 African countries now. And essentially what G20 is saying, it's let's get your fiscal and macros together. There's more money in the private sector than there is with the donors and multilaterals. How do you prepare the bride to be able to attract foreign capital? And what we have done is that we've met amongst ourselves to create a peer learning group to then take charge of how we are going to attract this type of private capital. And once the realization dawns, the private capital is much more than donors. I think we then begin to change our matrices to be able to attract that. And I think the challenge is really up to us to move forward in a new world that we are confronting. And good governance would help. I think another key to maybe the issue of discrimination, it's now, I mean, I was back in Ghana in 1990, and I've been there 25 years. The color of the IFC office is so different. So you then have decisions being taken by Africans, and therefore if we are discriminating against ourselves, then, you know, that's our problem. But certainly there have been quantum changes in nature, color, caliber, etc. And we ourselves as the aspirants are also beginning to go back to take charge of integrating into the global infrastructure. Because now, when you come to the finance ministry, it's not just a politician, but somebody who's been on Wall Street before, and the dialogue then becomes more equal. I suspect that really the sort of the African race, if we decide to coalesce and get and start getting engaged in sort of recalibrating where Africa is, we'll be doing a lot better. So it's a very troubling question, but it's an important question nonetheless, because at any point in time, we need to look at our systems, whether we've gotten too used to the way something happens, things have gotten too systematic and we don't realize it, and then change it. But I think if you cast your eye on the continent, you are beginning to see a certain progress and a certain confidence to take the future into our own hands. Thank you.
Thank you on those inspiring words. Thank you very much to our panel. That's Ken Ofori-Atta, Minister of Finance and Economic Planning in Ghana, Kristalina Georgieva, CEO of the IBRD, Philippe Leuro, CEO of IFC, Keiko Honda, the CEO of MIGA, and Bill Winters, the